Good afternoon, I'm Alicia Seckham and you're watching our Budget Day special right here on Business Day TV. So we've got under an hour to go before Finance Minister Tito Mboweni delivers his 2021 budget speech, and this in a context where South Africa's woes of stagnant economic growth, growing unemployment rates and mounting debt has been exacerbated by COVID-19 and increased government expenditure. So, with all eyes on Mboweni to deliver a plan of action, one that will slash our expenditure, pour money into the vaccination drive and provide funding for the recovery plan, let's go through how the minister is being expected to balance the books. And joining me for that, founder and chief executive of Pan-African Research, Iraj Abedian, Nessa Naya of Sasfin Securities, and member of SAICA's Southern Region Tax Committee and adjunct associate professor at UCT, Deborah Tickle. Thank you all for joining us this evening as we preview budget. Deborah, I'm going to start off with you. The commentary in the run-up to today has been that we could be a bit more pleasantly surprised by today's budget, with bullish commodity markets, for one, doing its part in boosting state coffers, even if we are looking at that fiscal windfall of about 100 billion rand and a budget deficit lower than forecast. Are you necessarily more optimistic about the state of the fiscus? Because yes, we're looking at a possible 100 billion rand more compared to the midterm budget, but still 216 billion rand less than National Treasury's estimate in February last year.
Yes, I think you've made a very good point there, Alicia. The 200 billion is behind from what we were expecting last year, and expenditure, of course, has changed from what was budgeted last year. So we're in a situation where we now need to look at how do we go forward, and the position is dire. I think now is the time for the minister to make some significant changes to zero-based budget, to look at really changing policies to create growth in our country. And of course, how is he going to do this? The cutting of expenditure. If we look at the wage bill, the public sector wage bill, that's around about 11% of all taxes collected. Interest is another 16%. That's a quarter of our money going on to things which are needing to be cut down. So public debt is not something that can be increased. The wage bill probably needs to be brought down or at least curbed. And this needs to be a collaborative effort. This needs to be something that happens between the public sector as well as the private sector. We've seen pain in the private sector. We've seen retrenchments. We will see, I believe, some tax increases, but it needs to be a share of the pain for the taxes to be accepted.
Yeah.
I'll leave it there for the moment.
Iraj, let's pick it up with you because, I asked that question in a context where I read an Intellidex report just the other day, and something it highlighted that was that a much larger cash surplus than expected could, in fact, complicate things politically, if you think about it. And now, the focus is now that government has the tax overrun, it's going to be more of a test of its dedication to its commitments. So are you convinced of government and National Treasury's commitment here?
There's no doubt that National Treasury is committed, but the budget is not about National Treasury and Minister of Finance. The reality is that it's the entire cabinet, the spending departments and agencies are the real obstacles to fiscal consolidation and or fiscal sustainability. So the question is to what extent the cabinet politically has got the coherence around what is a sustainable fiscal configuration. So that's the real challenge. The fact that we've got 100 billion more than what we budgeted for is neither here nor there, quite frankly. For the sort of shallow-minded politicians, it's money to spend, but from a fiscal management point of view, even with 100 billion so-called over-recovery, we are now below what we were in 2018. And that's how we should look at it in terms of medium-term and sustainability. If we look at the prospects of revenue sustainability, meaning tax revenue, the economy is stagnating. Every day we hear more job losses, and all of that means in terms of this year and the year after, if we do not come up with a growth strategy, the fiscal revenue will tumble down.
Absolutely. Nelson, let's get your view on this, because theoretically, where it's more likely that we're going to see a 10.6% reduction in tax revenue as opposed to a 17.9% drop, we should have enough room for National Treasury to absorb some of the spending, that's now emerged. And I say theoretically. We still can't gloss over the fact that we've got a minister who has to deal with a widening trajectory between revenue and expenditure. So what kind of holes are you gearing up for here that need to be plugged?
Alicia, let's just put this 100 billion in context. It was projected in October that we'd run a 300-odd billion shortfall. Now a shortfall is going to be 200 billion. But hey, it's a shortfall. Mm-hmm. And if you look at how that shortfall is financed, it's financed through debt. The level of debt we are raising, certainly for 2020, but also in next fiscal year, is also going to be, I think about 10% of GDP. So we're on a highly unsustainable debt trajectory, if I can call it that. We can't borrow this volume of money and expect to pay it off given where revenues are at the moment. So the question is, and for me, from an investor's perspective, is, what initiatives are going to be put in place by the finance minister to encourage investment, particularly from the private sector, into our economy. We saw that jobs number yesterday, a horrible jobs number. It saddens me that, there's so many South Africans that are looking, 7.5 million South Africans looking for work, but can't find it. And we've got to do something about it. We've got to understand it. I don't know whether we should have a commission of inquiry into unemployment. If that's a solution. But ultimately, we're only going to resolve our budget deficit and grow through growing the economy. So for me, the policies that need to do that, I'd like to see. The
problem with commissions of inquiry, Nelson, is that they cost money as well. So, that's going to be another funding equation to solve. Deborah, let's take a look at things here, because we highlighted that when it comes to any budget, you're either spending less, you're borrowing more, or you're collecting more. So let's for a minute focus on revenue here. Are any personal tax increases simply off the table this year and a total no-go zone?
Well, a lot of commentators would say that we've reached our peak insofar as collecting taxes are concerned. And if we actually look at how much personal taxes are collected, it is 39, or in 2019 was 39% of the overall tax collections, which is more than corporate tax and VAT. And there are very few taxpayers. There's a total of around about 6 million people who actually even pay any tax. And there's around about 213,000 who pay 40% of the total personal income tax. Now, those same people are paying significant amounts of VAT and other taxes like securities transfer tax, wealth taxes, etc. And yes, we do have wealth taxes, by the way, despite what the media tries to allege. We have estate duty, we have donations tax, we have securities transfer tax and transfer duty, all of which are wealth taxes. And we have to remember that anybody with any money in this country, anybody who's actually paying tax, is considered to be wealthy, because we have a huge body of very poor people. I mean, over 30 million poor people. So the point is that I believe that there probably will be some kind of extra tax, be it a stealth wealth tax in the form of, we've seen these before, in the form of perhaps a slightly increased CGT inclusion rate, or a change to how we tax trusts. We've seen a lot of that recently. Or an increase in a percentage, or a solidarity tax, which amounts to an increase in percentage. I believe there will be, but I don't think it will be accepted unless this is a team effort, unless the taxpaying public see that there is effort being made on the other side, that the public sector wage bill is being curbed.
Exactly.
Because, as I say, they're tired of paying for wages, interest and corruption. They want to see public services to the poor.
Absolutely, which would then amount to pouring, money into a leaking bucket here. Iraj, what about consumers feeling it through excise duties? I mean, that seems to be almost cemented in stone right now, sin taxes and the fuel levy. Where would the minister, perhaps be able to collect from? Or do you see him relying on just not adjusting perhaps for bracket creep?
I have absolutely no doubt that that's one part of the budget. I can bet on that the so-called sin taxes will go up. There is moral as well as fiscal imperatives on that, and very few people complain or can complain. But also consumers, we must be very mindful that consumers in general are under stress. Their revenues, disposable income is constrained. Some of them have already lost. So when you don't have an economic growth, as mentioned earlier, and when you don't have a robust prospect for growth, the overall economy and its tax base becomes fragile.
Yeah.
No matter which part you do it, through the expenditure, through income, through individuals, through corporates, the base becomes fragile. And in the language of fiscal language, the coefficient of tax collection, no matter what you do with your tax rate, the coefficient of tax collection drops. And that's exactly where we are. We've had 10 years of economic stagnation, a lot of promises, the investment hasn't been revived, and the economy is not growing. This question that, or this number that IMF and others pull out, that the economy is expected to grow at 2%, 2%. Bear in mind, the economy contracted almost 7 to 8%, which means in the next 3 years, if all the projections come true and better, in 3 years' time, we will be where we were in 2019, and 2019 was not something to write home about.
Absolutely.
So we have to put it in a context so that we don't get carried away. That essentially means the revenue base, the tax revenue base of government has shrunk, and unless we revive the economy, it will stay in that downhill path or on that downhill path, and that's what the minister should apply his mind to. Otherwise, we sort of in a situation of winning the battles and losing the war.
Nelson, still on revenue, do we push our luck and say that we could potentially be looking at corporate tax cuts here? What in your mind could a potential corporate tax cut do? It alleviates, yes, pressure off business in a low to no growth environment, but how does that work to potentially translate back into the economy?
Yeah, Lisha, if we had a buoyant economy and a very high corporate tax rate, you can expect that, cutting the corporate tax rate may actually encourage corporates to invest a little bit more, in their growth initiatives. But I don't think we're there right now. I'm sure people would like to see a corporate tax cut, but I don't think it's going to have an impact, on economic growth. I think what corporates want, they're happy to pay the 28% tax, but what they really want is some changes to some of the more restrictive policies. Maybe a bit of maybe the labor environment needs to loosen a little bit to make it less burdensome for them to hire and fire. But most importantly, we need the infrastructure to be maintained and to grow, particularly at Eskom and Transnet. I mean, you mentioned the mining industry. We saw such increases in commodity prices, but have a look at the companies that reported. You could count the companies that could increase production on one hand. Gold, platinum companies right now should be producing a lot more than what they've come out with. Of course, last year we had COVID-19, and there was a concern. But we still haven't seen any increase in electricity production or in Transnet's rail capacity, which is entirely, run by the government or institutions of the government.
As you say, Nelson, it's growth that's going to be the incentive for any business operating in South Africa right now. Mining companies have shown us that it's simply a better proposition for business to pay more taxes through growth, and profits garnered from a growing economy. Just yesterday, I caught up with Kumba Iron Ore and Harmony, quite emphatic about how much they've paid in taxes and royalties this year. Not complaining.